Hello everyone, 7 Investing CEO Simon Erickson here, and thank you for listening to the 7 Investing Podcast. Our podcast is made possible by our subscribers, who allow us to empower you to invest in your future each and every month. In exchange, we give our subscribers exclusive access to our monthly stock market recommendations from each of our lead advisors. To support this podcast and join other 7 Investing fans in our exclusive Subscribers Forum, where we discuss the latest market moves in real time, go to 7investing.com/subscribe to subscribe to 7 Investing today. We're here to empower you to invest in your future. We are 7 Investing.
Hello everybody and welcome to the latest edition of the 7 Investing Podcast. If you can't tell, we're picking up again with our buddy Krishna, and I'm here with Krzysztof. We're all wearing the same t-shirts. We're actually recording still. This episode goes out on the 30th of May. You know, Krishna, actually, I didn't say in part one, but just 3 days after this episode goes live, I'll be arriving in Hyderabad on my way to Sri Lanka. So I'm going to spend a couple of days in the city. I think you're in Mumbai though, is that right?
Absolutely, yes. I'm in Mumbai.
I'm sorry we're not going to get a chance to catch up. Mumbai is a fascinating city, and I know you told us quite a bit about kind of what's happening in India generally. In our first conversation, we talked about demographics and the retail investor mindset. Whereas we pick up part two of the conversation, and if you haven't listened to part one, I highly encourage you to go and check it out. But in this second half of the conversation, we're going to get into some of the nitty gritty. We're going to talk about some of the challenges faced by retail investors in India, what's happening with the future of investing in India, what's the trajectory of the country, and we're also going to get into a couple of interesting sectors and segments that Krishna thinks are particularly interesting, perhaps for overseas investors. And maybe also we can close out with any practical advice you might have for listeners who are interested in building a bit of an Indian exposure in their investment portfolios. But why don't we kick off with that first topic, though, challenges faced by retail investors in India. Where should we start with that?
So, like I said in the previous episode, we have a lot of new investors coming to the market. And, that means they could get their information from all kinds of different sources. And I think that's where a lot of the challenge would lie, in being able to find the right kind of resources as an investor. Of course, the Indian stock exchanges put out detailed filings. You get quarterly reports, presentations, con calls, annual reports. So you do have, all of that. But it's important that the retail investor knows to look for these things. And that largely depends on, how they're being introduced to the market. The government on their part is doing a lot in terms of educating retail investors as far as mutual funds go. So there are a lot of investor awareness, mutual fund advertisements put out by the government, which encourages them to do SIPs, which is nothing other than dollar cost averaging. So an SIP is like a fixed investment that goes into a mutual fund product every month. They're really, really popular in India, and a lot of people take out a small portion of their salary and put it into mutual funds. Mutual funds are well regulated. That part of it is good. I would say that you're far more supported as an Indian retail investor as opposed to the equivalent in the US, because the sheer scale of the number of investors allows platforms to charge either nothing or very low fees to be able to provide products. For example, we have a tool here that's really popular called screener.in. It's a website, screener.in. And you can just type any company. You get 10 years worth of financials. You get 200-day moving average, 50-day moving average. You get a list of prominent shareholders. You get cash flow statements. You get a summary of the business operations. And now it's even integrated with ChatGPT, and you can summarize con calls with one click. And the vast majority of these functions are free to use. For anyone interested in any company, they can just type the name and do it. It's only a handful of features that are behind a paywall. I would say the quality of YouTube content as far as educating investors goes in India is quite high. You also have a lot of crap, but like I guess that's everywhere. But you do have good quality material off of YouTube. You have career investors coming on YouTube, and you can hear them talk on a regular basis. Your fund managers come on again; they talk on a regular basis. So if you know your way around things, you can do a lot of the stuff. Just give you an example: the research reports from brokers in India, you can access them by like just giving your email address and a few details, which in the US is a lot harder to do because they don't just give you their brokerage reports for free, but you do get that here. Um, the price targets can be as off as they are in the US, but you'll at least get a good sense of the business. So I would say it's easier in ways and it's harder in ways. Harder more for beginners. If you're an intermediate level investor in India, it's a lot easier for you than it would be in the US, especially in terms of financial investment.
And I suppose I didn't mention it in intro, but you're the founder of Indians Invest Globally, which is a community of over 1,200 retail investors and folk interested in the market. What kind of conversations do you have in that community? What sort of things are people interested in?
Indians Invest Globally is a community of investors who invest abroad and in India. So they're generally more sophisticated investors. So the types of discussions that take place, whether it is on India or abroad, are generally, more nuanced, more advanced. They're more in detail. You're not running like basic investor awareness. Just to give you an example, one of the biggest international platforms to invest through in India. We have the founder of that platform as a member, so you'll just come casually like chat on the group chat. So you've got a really great audience, and the level of questions is actually really really high because you do need to have a certain net worth for international investing to make sense in terms of the fees. That would put you in a different segment compared to Delhi Investors Association, which I mentioned. Both these groups are like free to join, and anyone can join them. But like Delhi Investors Association, for example, has more than 23,000 members right now, and that's because the barrier to entry is very low. You could open up a brokerage account for maybe like $5, $8. There are platforms that allow you to do it absolutely for free. And like I said, you can do it in 30 minutes. So the barriers to entry in the Indian market are far less than they are in the US market. And that's why the discussion levels in these two groups can vary. Of course, we get a lot of experts on DIA as well. And they have AMAs that sometimes last for hours and hours and hours and hours. But yeah, I think both communities are incredibly passionate and they're ecosystems in themselves.
Can I ask a very nuts and bolts kind of question that hopefully will be of use to our listeners wherever you are globally? If you're an investor who wants to participate in India, what account do you need to open up? What's step one?
As a foreigner, your options to invest in India are limited unless you are an NRI, which is a non-resident Indian, or overseas citizen of India, or you're basically of Indian descent and you can acquire, one of these two statuses. Outside of that, you're limited to ETFs, which you can get on the US market. There are ample number of India-focused ETFs. What I'm hoping is, as India rises in its stature and the market cap of India goes up, you'll have more thematic ETFs specific to India, which right now aren't that many. I know there's a consumer ETF that you can get access to. There's a tech-based ETF that you can get access to, but generally, like most of them, will mirror the most popular index in India, which is the Nifty 50, which is the top 50 companies listed on the National Stock Exchange, and it's the most popular index in India. That will give you some broad-based exposure to India. You can also invest in a small cap ETF in India, which is also available in the US market.
Is it common, Krishna, for Indian companies to be listed under an ADR overseas?
So it was once upon a time where companies needed to go outside to get capital, but Indian markets are becoming increasingly strong. For an investor in about the net worth of 50 million, they are able to invest directly in India. So there's a lot of money coming into India, through the route of mutual funds, through the route of portfolio management services. So there is no need for a lot of companies to go abroad and list. Some of them still do, but it's fairly uncommon. The ones you see are actually very, very well established Indian companies that listed during the 90s or the 2000s. I would say right now the ratio would be like 100-1 in terms of number of companies that would list in India as opposed to the ones going abroad. Specific companies do list sometimes only in the US, like Freshworks, which has its CRM suite and is a really popular company, didn't choose to list in India. India's largest travel aggregator, Make My Trip, again is listed in the US, not listed in India. So you do have some cases like that of very prominent companies going abroad and listing, and even during the SPAC phase, there were a lot of potential opportunities that could have opened up had that phase gone on a bit longer. But yeah, as of right now, I don't see you getting proper exposure to India via ADRs. I would say ETFs are much better.
But that'll be interesting in the future if more thematic ETFs pop up. I'm kind of lucky. I think I can apply personally for person of Indian origin status. So I haven't got the $50 million, but maybe I could be able to build an Indian portfolio if I pursued that route.
Yeah.
But otherwise, if you don't have that sort of wealth level or those connections, then ETFs sounds like they're the way to go.
Yeah, like we said, there should be a lot more that would pop up. If I'm an asset manager, sitting in the US today at BlackRock or iShares or Vanguard, or, I would be looking at India going like, this is an exciting space that's growing.
Maybe we can turn the conversation towards the future a little bit and, your own sort of vision as the founder of Indians Invest Globally for the future of investing in India, but maybe also just what's happening in the country, emerging trends and potential growth areas. Is there anything in particular you draw our attention to?
May I just add one little bit of setup for you, Krishna, on top of what Luke was saying? I discovered that the recent growth in India has been quite stellar, but it hasn't quite gone that sort of exponential curve yet. But that all of this was pretty much done up to now without actual industrialization, but the raw materials for all the industrialization are already kind of in place with the roads and trains and the internet boom and all of that. And so it seems to me, again, I'm looking for your color and feedback and nuance, that it's almost astounding that all of this seems like prep work for the next huge leap.
That's actually remarkably insightful that you managed to put all of that together by reading stuff on the internet. But yeah, you're absolutely right. So most of the Asian economies sort of follow a blueprint, which is export a lot of goods, cheap manufacturing, and then reinvest that capital back into infrastructure. And that forms like this, self-propagating cycle that creates that exponential curve. Now, different to a lot of these other economies, India has built its back on services. We as a country import 84% of our oil need from around the world. But despite having such a big deficiency, our software exports today are larger than our entire oil import bill. So that's really, really massive. And, all the companies listed again in the US are all these IT companies which have ADRs because they've grown into these outsourcing powerhouses. I wouldn't say that industrialization didn't happen, but it was sort of like an incomplete hatchet job that was done over the years. It was very disproportionate because it depended on the willingness and capability of the individual entrepreneur, which is why you would have some examples of businesses that did really, really well because they dealt with really adverse conditions and were then able to grow. And when India's liberalization movement happened in 91, they were sort of ready to skyrocket. And a lot of these businesses have had the industrial background, but it's not been broad based. And the government recognizes that. And in fact, even Morgan Stanley in their report has written that they expect manufacturing to 3x by 2031. That's that's crazy when you look at these numbers. But when you look at the production linked incentive scheme, it makes a lot of sense because if you have an additional $520 billion worth of output coming from selected industries, and when we talk about sectors, the top 4 segments in the production linked incentive scheme are also 4 of the most promising sectors in India, which would be pharmaceuticals, specialty chemicals, electronics, and I would add a 4th component around renewables. Because as India's energy transition happens, as much of energy needs of India are increasing, and a lot of that incremental capacity is going to come from renewables. So we don't need to transition because it's all fresh capex, that's coming out.
I know Krzysztof is a real kind of renewables and a battery head. Is that predominantly solar or tidal or other sorts of renewable energy?
It's primarily solar because India gets great sunlight for most of the country. We've also set up a power exchange in India. They're trying to get more and more of the power that's collected through solar connected to this grid system so that, someone in a state with less sunlight can buy electricity in real time from a state with more sunlight. And we can increase as far as possible, the extent of renewables in the overall energy basket. The government is really, really, really pushing solar as a segment. The 2 biggest conglomerates in India, Reliance and Adani, have made major investments in the clean energy space. And that seems to be a segment that's going to grow massively. You have another sort of mini trend, green transition. I don't look at it just in terms of power. You've also got other stuff like taking care of the environment, recycling, plays like that. Energy efficiency is becoming a big theme in India. So all of the electronics that are getting made, whether it's fans, air conditioners, stuff like that, they're getting rated on a scale. So you buy any product from a store, it has a central energy rating on it as to how energy efficient that device is compared to its peers. So there's a lot of emphasis on both efficiency and being as green as possible. We take the Paris Accord really, really seriously in India. I think India is one of the only few countries that's on track to meet their Paris Agreement goals. So yeah, renewables is a major, major, major theme in India.
I was going to say, in the little battery company that could or might that I've been obsessed with for the last few months on its global energy opportunity presentation, it listed 3 flags on the international scene, and India was one of the flags. So FYI, everybody's looking, I think, toward India as an obvious place for massive investment in terms of manufacturing infrastructure and renewables.
Yeah, it's a fascinating area. I'm actually looking at a renewables company myself for my own 1st of June 7 investing recommendation. I haven't dug into their India exposure yet, so I'll have to do that.
Yeah. Also, like one more thing to remember, because India's oil exposure is so externally dependent, it becomes a matter of energy security to have as much of a chunk of renewables in their, energy basket as is possible, so as to reduce the external dependency. Also, in terms of a renewable play, India is big on ethanol uh, as a blend into their fuel. This is something that's actually big in Brazil, where they do a lot of ethanol blending in order to reduce their oil exposure. And all petrol in India should be ethanol blended to 20% ethanol. It is an interesting fuel source, and I think India's exploring it a lot. They're super ambitious. There's something called E100, which is a purely ethanol based fuel. So they're even exploring the idea of maybe having that and how that would work, because India is such a big agricultural country, and about 40% of Indians are still farmers. So if you can produce something out of grain, you've created a great source of income for people, and you've created a great import substitute. So that's another very interesting area.
Is this kind of the area we would term as being like biofuels in the UK?
Biofuels is the segment, because when they talk about it, that's usually the moniker they use.
So Krishna, I know you're not at liberty to talk about specific stocks, but how can you help us get as granular as possible for somebody that's listening to this and says, okay, I'm buying what they're selling, and India's the next emergent global power, and I'm on board. Outside, general ETFs, where are you looking? Where are your eagle eyes focused on finding individual opportunities?
A large part of my portfolio is geared towards this jump in per capita income. As disposable income increases, where would you spend your money? That's sort of a major theme, running in my portfolio. So you could see something like, movie theaters, for example, getting a larger share, although that is a segment that's being disrupted, but there's still so much demand that's going to come, to be able to go out and have a great time at a cinema, or to be able to buy something that previously was a little bit out of budget. India being such a strong consumer staples place, anything in the discretionary basket for me is something that will go through disproportionate growth relative to everything else. I think even Motilal Oswal did a study of all the companies that were 100 baggers, 20-year period, and there was one discretionary player in it. So that tells you how much that basket is ready to fire. It's been export services, it's been pharmaceuticals and chemicals players, and it's been infrastructure players, which have done well up until now. As your income increases, that middle class gets the ability to spend more. As a listener, what would you spend on? If up until now you could only spend on your basics, and now you can spend, double the amount of money that you had before, but half of it is disposable. Where would you spend?
So I think the best is sort of it's not sci-fi, but it definitely is future-oriented question for you. We know that Apple has positioned itself as a luxury brand, and they're not willing to go down market, and that's part of the brilliance of the strategy, because it's a status symbol and it's all of that. And we know Apple is now full in and thinking of India as its next big luxury market, right? So obviously there's a lot of people that won't have access to Apple products, but nonetheless there's obviously enough that Apple's going forward. In your best prediction, when does Tesla show up in India?
Oh, see, I'm far more bullish on Apple's growth in India than I would say Tesla's growth in India. Because by the time Tesla can arrive in India, you may have an already really strong EV ecosystem that's built with cars that cost half or one third of what Tesla's cars cost in India. India is an automobile powerhouse in terms of supplying cars, even in the region, to countries around. And it's got a really strong automobile industry. A lot of international Japanese players manufacture in India to export abroad. I'm not really big on cars, so I can't give you the picture as well as somebody who's really into cars would be able to give you. But I can tell you about things I've noticed on ground with the EV ecosystem, and it's booming. Like players are getting ready, and India is a we have three different types of vehicles. I think this always like catches people abroad off guard. We've got two-wheelers, three-wheelers, and four-wheelers. So people are used to the two-wheelers and the four-wheelers, but not so used to the three-wheelers. Uh, so yeah, we've got the equivalent of what are tuk-tuks in Thailand. We've got rickshaws in India, and a lot of people commute using them. So we've got a huge number of players already in the two-wheeler EV space. The Tatas, which own the Jaguar and Land Rover brands around the world, they are building or sort of leading the EV race in India. I think they have 60-70% market share right now in India. Also, the thing is that if Tesla were to launch in India, it would be a challenging gamble even for them, because I don't know if they would be able to, set up in India and have enough of a domestic market for consumption. They already have a factory in China, and they are already exporting from there. But India will put 100% duty on anything coming from outside into the EV or automobile manufacturing ecosystem. So landing in India at double the price means it's not going to sell. Of course, you'll have fans of Tesla and Elon Musk who will buy it at any cost, but that'll be a minuscule segment in India. So he needs to be able to find a way to set up in India and export from India and build an ecosystem and possibly even launch an India specific Tesla car to make it work, which is a lot to expect from Tesla to do. And even if he does come here, it's not like, all the other players in India are just going to be like, okay, you know what, come take up the market. They're going to fight tooth and nail. Tata is already working hard on setting up the charging infrastructure in India. Maruti Suzuki, which is an Indian-Japanese joint venture, is also going to work really hard on getting in their own EVs. So we have smaller manufacturers who are all trying to come in at the sub $10,000 mark as far as cars go, and that's going to be a really competitive space. But I don't see where Tesla fits in. There it'll have to compete with the luxury guys, your Mercedes, Audi, BMW, all of that.
So, Krishna, in my own memory of India, last time I visited was 2012. I came out for a month. The absolute chaos on the roads. It's almost hilarious. Cars and motorcycles on every side of the road. I rode a bike for about half an hour, and I'm like, this is just too much for me. This is too crazy. But honking horns, but the smell of fumes and kind of gas tanks. So when I come out next month or in a few days' time after the episode drops, is it going to be this EV paradise of smoothly running machinery?
No, not at all. I think that would be a lot to expect. Also, India develops different areas very differently, right? For example, if you guys pull up a photo or a video of the CBD in Mumbai, which is called Bandra Kurla Complex, and you look at it, and I mean, outside of the tuk-tuk, you would not be able to tell where in the world this is. So it's that developed, and I think Hyderabad, in fact, will be a great proxy for the tier 1 cities in India when you go there. So you'll see a lot of improvement in the infrastructure for sure. 2012 was before this government came in, before the ease of business. It was a different world. Corporate taxes were cut in 2019, which was a game changer in India. We went from an effective tax rate of 35% to 25% overnight, which was huge. New manufacturing units could come in at an effective rate of 17%, which was unheard of in India. So a lot has happened, even over just the last 4 or 5 years. In fact, I would say come to India every 5 years and have your mind blown.
I'm really looking forward to that visit.
Yeah.
So you talked about EVs a little bit and the growth of manufacturing.
Yeah.
We'll just pick back up on Krzysztof's great question, though. What are the segments that we should be watching in particular, do you think, right now?
See, I think one area that's going to boom a lot is like the electronic space. So we have a lot of contract manufacturing that's happening. We have electronic components that are getting manufactured. So you have that space that's really booming. Pharmaceuticals and chemicals have always been something in India that have done really well. They should continue to do well. I am personally more bullish on the discretionary side of like pharmaceuticals. So you could have like nutraceuticals, cosmeceuticals, stuff like that, which are more interesting. Stuff that you would apply for health and beauty benefits, which would traditionally be really expensive, but as you go from $2,000 to $5,000 per capita, I mean, being able to spend $10, $20, $30, $40 per item, those items I think would skyrocket the most. So I'm looking in those places, things that are lower in cost, that could be higher in volume, things that the developed world looks at like a part of their staples basket, but all of India yet doesn't consider it, part of their staples basket. One great thing I would tell everyone to do is that US viewers are very comfortable with Shark Tank. Try and watch the India version of Shark Tank. That's a great way to understand what's happening in India. It'll give you access to a different ecosystem than the public listed space, which is a startup ecosystem. But and I'm not sure exactly how the viewing rights and stuff like that work as of yet. But I'm sure, for the willing and the determined, they'll find a way to watch it somehow or the other.
Shark Tank India, 2 seasons available.
It's mad popular. You have entire families sitting down over the dinner table and learning what valuations and gross merchandise value and price to earning multiples are. So it's crazy.
That's fascinating, actually. If it's if it's like family entertainment, almost. That's because that's not how Dragon's Den, which is the UK version of that show, kind of runs here. It's for kind of investing geeks, really.
Yeah. No, in India it's everyone, because it's become such a big thing, and the older generation also wants to learn about it. They don't want to be unaware. And generally in India, a lot of families are not nuclear. They still live in big setups. So you have a main television in the house, and generally it's become like primetime television in India. Which is crazy, but it's starting the conversation around business. And in India, before this, you were either a doctor, a lawyer, or an engineer, or a failure. So you had 4 options to make it, which is also why you have so much engineering and medical talent in India, right? Because it's so important. But this is opening up the business culture in India, which I think again will have profound effects 5-7 years out.
So quick internet research led me to Shark Tank India on YouTube.
Oh yeah, some of the episodes should definitely be on YouTube. Yeah.
Mm-hmm.
I'll download a couple for my journey out.
I think they're a mix of Hindi and English, but with subtitles they shouldn't be difficult to understand.
And not sure I'm putting 2 and 2 together and getting 5. When we talked about Tesla, you mentioned a very high import duty for that brand to get their product into India. Is it the same pretty much across every sector? So, for example, like cosmetics and pharmaceuticals.
I wouldn't say the duties for anything is as high as it is for automobiles. Automobiles in specific have always been a sector which have attracted the highest level of duty. What a lot of international brands do, which is what the government wants, is they come and just set up an Indian plant and then just make everything here. So you do land up getting everything that you get internationally at the same price or cheaper than you get it internationally. So it's not really an issue except for like automobiles.
Okay, so you do have a mix of sort of international and domestic brands across most other segments.
Yeah, even if I had to look at what I'm wearing right now, like I'm wearing Crocs slippers, Adidas shorts. This is jockey. I don't know it's how popular that is internationally, but like mostly, you'll have a good mix, especially in garments and things like that. You'll have more international brands, in fact, compared to like Indian brands. But yeah, it's a good mix overall. I wouldn't say that the duties are like prohibitive anywhere except maybe in like really really high luxury. And I think what's also important to keep in mind is that most segments are not such large purchases, right? So like a car becomes a really really large purchase, so the duties would hit you a lot more, and it really goes outside. That, like I said, the top 2% of India will be at $25,000-$30,000 per capita income. So you're still talking about like one family's annual income on a Tesla, right? So it's not a it's not a very like well suited fit for India as it is right now. It would require some like real thought process from Tesla's side if they want India as a market.
Well, Krzysztof tried to turn this into the Tesla show, but it's India, not Tesla. Sounds like that didn't land. You've pointed at ETFs as probably being the main avenue for an international investor to get exposure to India. Are there any good tools or websites you could point an investor at, like a good starting point with their own research?
See, what you can do is like an ETF DB will give you all the ETFs that have India that are India focused, and then you can use like a website like screener.in if you want to look up any information about the individual companies. You've got the company's website itself, which are all in English. All exchange filings are all in English, so super easy to like go through. The accounting is very simple; it's not very complex. So if you're used to reading a balance sheet and a cash flow statement and a profit and loss, you'll be able to understand. And most of the larger companies in India, they put out really nice presentations, so you'll be able to get all of your understanding from there. If you want broad-based India exposure, you'll get it through Nifty. The small cap ETF is a very interesting ETF because it's sort of giving you exposure to emerging India. So you have that. In fact, why don't I just pull up the India ETFs and we can just discuss what's available so that you get a sense, right? On ETFDB, there are about 17 ETFs listed as India focused. Most of these should be, they're just India ETFs, which I'm assuming will track either the top 50 or the top 100 companies in India. You've got like a financials ETF, which will give you access. Again, that's a great way to like play the Indian economy because financials generally will grow at about 1.5 times what the GDP will grow at. And nominal GDP in India should grow at about 11%. So you're looking at a pretty substantial return just from financials. You've got one consumer ETF, which is the Columbia India Consumer ETF. So you've got that. You've got internet and e-commerce and digital India, which I find interesting. The consumer ETF still has a lot of very large companies and it has a lot of consumer staples in it. But you will get a lot of exposure again to like auto companies, which will give you consumer discretionary in their own way. So that's one way to look at the consumer basket. E-commerce again and internet is like all of the newer age companies. It's got some which are slightly more traditional, some which are more interesting, it's a good mix overall. Like you've got Reliance Industries, which I said is one of the largest companies in India. You've got the railway ticketing platform, which is a very interesting platform because it's an asset-light model. It charges a fee for you to book a ticket on the platform, and it's the only platform through which you can book railway tickets. So that's another really interesting business. Make My Trip, which I said is listed in the US, not listed in India, India's largest travel aggregator. So the India Internet and E-commerce ETF is also quite interesting. It's got two of the larger brokerages. The most popular brokerage in India is privately held, so you can't invest in it, unfortunately. But yeah, and you've got Digital India. Let's see what's there. That's a lot of traditional tech mixed up with some of the newer age companies.
And the website you're referring to now is ETFDB. Maybe we'll drop a link in the show notes. Could I double click into e-commerce? My recollection might be faulty. So there's a big e-commerce brand headquartered in Singapore, Sea Limited, SEA. Did they get thrown out of India about a year ago?
I think so. Their website, I think, is Shopee, right?
Yes, that's right. Shopee, correct. Yeah.
I think it was a complex situation. It didn't really do well. The two largest players in e-commerce in India actually both US owned. So you've got Amazon, which is really, really popular in India. In fact, since you're in the UK, you'll see that actually the delivery times for India are actually faster than those in the UK. Not as fast as the US, of course, but they're really, really good, and and it's really, really popular. And the other alternative is Flipkart, which I think is majority or fully owned by Walmart. So that's the two big players you've got in India. And then you have beauty and fashion as a separate vertical, and then you've got a company called Nykaa that's in that space.
Who's that? Sorry, Nykaa.
NYKAA. I mean, I never shop on that website, but it's really, really, really popular.
Great.
So yeah, e-commerce is really huge. It should again double in the next 5 or 6 or 7 years. But I mean, you get exposure to it through Amazon or Walmart only. I think Walmart at some point was considering doing a spin-off for Flipkart, which is the Indian e-commerce platform, which if it ever happens and it lists in the US would be a really interesting way to play the e-commerce theme in India. I don't know what the numbers are, obviously, of the company because I don't track it as a part of Walmart. It's too big for me to be interested in. But I think it would be interesting to check out.
My big picture top-down approach invites listeners to take the time to invest in some deep understanding of the history of India and the culture, especially because of its relationship to the English-speaking world. And I was doing some research on books about India, and I came across one that seems to be head and shoulders above others. I don't know if you're familiar with it, Krishna. India After Gandhi, The History of the World's Largest Democracy by Ramachandra Guha.
I haven't, not really familiar with it, but if you want a big picture book like that, which I would say is a little bit more in tune and aligned with what's happening in India right now, I will check out India After Gandhi for sure. But this book is written by someone who's an active investor in India. In fact, his next book will be really interesting, which is called Long India, which is his investing thesis on why everyone should be long on India. But his name is Harsh Madhusudan. He's also on Twitter @Harsh Madhusudan, one of the best resources on tracking India. And his book is called A New Idea of India. And I would say it's an absolute treat to read, because both him and his co-author, they're very passionate India believers. They're really young. They often engage with government in different ways. And I think their viewpoint is shared by a lot of Indians. Their book, because the Amazon used to own a publisher in India, and that sort of went down. So now their book has been picked up by Penguin, so it should still be available somewhere. But in case it's not, you'll see it in a couple of months for sure, coming back with Penguin. Plus, like Long India, and just in general, like everything that we discussed. If you want like a lot of deep insight around stuff like that, easily on your Twitter feed, I think Harsh is a great person to follow as far as India is concerned. There is another really good investment book. Like you have Market Wizards in the US, which is really popular as a series. I don't know if either of you have read it, but there are like these little interviews of successful investors, and it's an entire series. I think there are about 4 or 5 books in it. But we have a version of that in India as well. I don't know if you'll be able to get it, but if you can, it's exceptional. It's called Masterclass with Super Investors. It's really good.
So fascinating and a long 2-part conversation, Krishna, as we sort of bring it to a wrap, because I know it's getting pretty late your time in Mumbai. Would you have any general advice for investors interested in India? What should we be thinking about?
See, again, it depends on how much you want, how much of a segment or how much of a portion of your portfolio India is going to become. But if you see yourself as someone who's global macro, or somebody who is a global investor with maybe 50% of your allocation abroad, then I would say it takes some time to understand the mindset of the Indian person, because it is a slightly different mindset. They spend a little bit differently. It's a conservative culture. There's not a lot of leverage in the economy. Spend some time understanding what Indians are like. If you can, and if you are able to visit India, that'll give you a very clear picture. And if you do, please visit a tier 1, tier 2, tier 3 city. So that way you get an understanding of what 3 different versions of India can be like. Of course, this is a lot. And if you don't want to do any of that, then just watch a lot of YouTube videos on India.
Oh no, we're sending Luke out into the field, so we're gonna get photos.
Yeah, you could.
And you're recapping a little bit some of the conversation from episode 1. If you've just come straight to this episode, just go rewind and pick up the first half of this conversation where Krishna tells us all about demographics in India and the retail investor mindset. Really fascinating start to the conversation. Well, that's been a really great 2-parter, Krishna. I really valued your insight. I'm a little bit disappointed I'm not able to buy individual company shares. I didn't realize that was the case. But if the country launches a wider range of thematic ETFs, then I'll definitely be all over ETFDB, trying to see how I can build some international exposure to India in my own portfolio.
Yeah, I don't see why that won't happen, because you can already see some of them popping up, and it's just for them there is no restriction, right? For the bigger ETF players, there's no restriction. They can come in and they can own a lot of the stocks and build out as many thematic ETFs. I think this conversation is happening sort of at the right at the beginning, of this big boom, and I suspect that over these next 7-8 years, everyone's sort of going to wake up to India at the same time, and that's going to be meaningful, because Morgan Stanley predicts that the Indian market will be $10 trillion, the stock market, and GDP somewhere around 7.5 trillion. So when you're looking at those kind of numbers, then of course everybody's going to pay attention, right? You don't have that many economies in the world. In fact, at that point, India would be the 3rd largest economy and stock market to be able to invest in. So I think all the US players should be picking up ETFs by that point.
That's great. Great to hear. We're not too late to the party. We're right at the start of this journey.
This is the best time. Like I said, the population, the working age population will peak around 2030, and then it should be north of 65% for the decade after that. So you have a good 17 years of prime that's ahead of us.
And the groundwork has been laid. So, right, yeah. That's one thing about investors. You see the tide shifting for the positive, and some people think, oh, I'm too late. You have to think much longer term, and India becoming the world's most populous country is not a small thing. The connection to the internet is even bigger. It's just getting started. So do not erase that from your mindset that you're in any way late. I think, Krishna, you're absolutely right to focus on that. If you're listening to this, you're showing up at exactly the right time. Fashionably late, which means not late at all.
I would in fact argue that if you're listening to this podcast, you're early. As a global investor, you're aware, you've woken up, you have the insight, and you'll be perfectly placed for when the instruments drop. You would know all of this. You would have listened to both our two-part conversation, or maybe like more episodes by that point, and you would have enough information, already. You would have read these books that we recommended, and you would be, in place to take advantage of that.
Fantastic opportunity for all of us to learn a little bit more about the world outside of these crazy US companies that we all seem to follow religiously.
Absolutely.
Thank you so much. Yeah, thank you so much, Krishna, for taking the time and for all your insights and details. It was an absolute pleasure speaking with you.
It was an absolute blast for me as well, Luke. It was great to catch up again, and I'm so glad we were able to connect and do this, and I look forward to doing it again sometime.
Fantastic. Well, just to close out part 2, if you could remind our listeners, if they want to read more from you, Krishna, or maybe join Indians Invest Globally, where's the best place to find
you? It's on my Twitter account, and the link to join Indians Invest Globally should be on my Twitter account as well. Maybe Indians Invest Globally may, pivot into something else in the future, but I'm always open to connecting on Twitter. Just, drop me a line, and if it morphs into something else, it will still, welcome everyone and be a great place for discussion on businesses in India and around the world.
Krishna, remind us of your Twitter handle.
@Bahirwani Krish, so BAHIRWANI KRISH.
Fabulous. And you can also find myself and Krzysztof over at the Twitters. I'm @7LukeHallard.
And I'm @7FlyingPlatypus.
You have been listening to the 7 Investing podcast on No Limit with Krzysztof and Luke. 7 Investing, where it's our goal to empower you to invest in your future. And with these last 2 episodes, hopefully invest a little more internationally in your future. Krishna, on behalf of us both, once again, thank you so much for your time.
Thank you for having me.